Hey there, energy enthusiasts. Today we're diving into BP's jaw-dropping decision to ditch renewables and dive back into oil and gas. Let's break it down. First up, BP is shaking things up by shifting its strategy away from renewable energy investments. Instead, they're ramping up oil and gas investments by a whopping 20% to $10 billion annually. On the flip side, they're slashing renewable energy funding by over $5 billion. That's a massive pivot. Now, BP's production goals are ambitious. They aim to boost oil production to 2.3 to 2.5 million barrels per day by 2030, with major projects kicking off by the end of 2027. This is a big bet on fossil fuels. You might be wondering, why the sudden change? Well, BP's financial performance has been underwhelming. Their 2024 net income plunged to $8.9 billion from $13.8 billion the previous year. With lower profits and share prices compared to rivals like Shell and Exxon, BP is under intense pressure from investors to turn things around. Speaking of investors, activist investor Elliott Management, holding nearly £4 billion in BP, has been pushing for better returns. BP's CEO is now laser-focused on generating cash flow and delivering shareholder value. Over the past 5 years, BP shareholders saw total returns of 36%, while Shell and Exxon delivered 82% and 160% respectively. But the market reaction to BP's strategy shift has been mixed. BP shares initially went up before the announcement but tumbled shortly after. RBC noted negative sentiment around the strategy reset, and there's even speculation about a potential takeover or moving BP's main stock market listing to the US. On the renewables front, BP is scaling back investments in biogas, biofuels, and EV charging projects. Instead, they're looking for capital-light partnerships in wind and solar energy, including a joint venture with JERA for offshore wind. They're still investing selectively in renewables, but with a much narrower focus. Environmental groups like Greenpeace UK are not happy. They argue that fossil fuel companies can't be part of climate solutions. BP, however, insists its net zero ambition remains unchanged and will continue with UK green energy plans, including wind farms and carbon capture projects. The International Energy Agency has a stark warning, though. No new fossil fuel projects are compatible with limiting global warming to 1.5 degrees Celsius. In other news, BP is reviewing its Castrol business and has agreed to invest in redeveloping the Kirkuk oil fields in Iraq. Historically, BP aimed to cut oil and gas production by 40% by 2030, but this was lowered to 25% in 2023. Sir Ian Cheshire has weighed in, questioning the long-term viability of BP's decision, emphasizing the ongoing importance of the energy transition and the unchanging science of climate change. So what's next for BP? Only time will tell if this strategic shift will pay off or if it's a gamble that will cost them dearly. Let me know your thoughts in the comments below. Don't forget to like, subscribe, and hit that bell for more updates. Until next time, stay charged up.